If you're thinking about buying a condo in Kelowna, this series will walk you through what really matters, from price and buildings to rules, fees, and long-term risks, so you can buy with confidence. Hi, I'm Paulmondoux, Realtor with LePage Kelowna. I help buyers and sellers navigate all types of residential real estate, from condos, townhomes, to single-family, acreages, to luxury lakefront properties across the Okanagan Valley here in British Columbia. Buy a condo in BC, you're not just buying the unit, you're buying into the building, the insurance, and the financial health behind it. And this is why every offer to purchase should include a subject to reviewing the Strata documents. That subject is there to protect you. One of the most important documents in that package is called the Form B. The Form B is the Strata Corporation's official information certificate. It tells you things like what the current Strata fees are, if there are any arrears on the unit, what the insurance deductible is, the insurance coverage the building carries, the current contingency reserve fund balance, and whether there are any special levies approved or pending. In other words, the Form B gives you a snapshot of the financial and insurance health of the building before you commit. Strata insurance usually covers the structure of the building, the roof, exterior hallways, elevators, and the common plumbing and the electrical systems. Also covers original developer standard finishes inside the units. What it usually doesn't cover is your furniture, your upgrades, your personal belongings, or your personal liability. And it usually doesn't cover losses under the building's deductible. And those deductibles can be quite high, especially for water damage. That's why every owner still needs their own condo insurance policy. Where your strata fees actually go. Many Kelowna buildings, a rough breakdown often looks like this. About 40 to 50% to day-to-day operations and maintenance, 20 to 30% to building insurance, about 15 to 25% to the contingency reserve fund or CRF, about 5 to 10% for amenities that the building has that everyone shares. Every building is different, but this gives you a realistic picture of your monthly fee and what it's for. The CRF is the building's long-term savings account for major repairs, roofs, windows, elevators, building envelope, and major mechanical systems. A healthy CRF usually means fewer surprise special assessments down the road. A weak CRF usually means owners get hit with big one-time bills. On the next video, we'll talk about where to buy, your lifestyle, your family, and walkability.